Good morning, everyone. My name is Jason Collins, and I'm here with URL Insurance Group. I'm an agent support specialist here at URL, specializing in single premium life insurance. First off, I'd like to thank everyone for taking the time out of your busy schedule to be with us today. Those of you that are currently doing business with URL, I'd like to personally thank you. We understand that you have many options as to where to place your business. That's why we appreciate you working with URL, and we'll promise to continue our dedication to your success. Some of you are new to the URL family. Welcome. URL is a full-service national broker. We provide agents complete support in all of our lines. URL provides single premium life, fixed and indexed annuities, traditional life products, as well as individual and group health products. We also have a senior division that offers MedSup and MedAdvantage products. So please take a moment after the webinar to tour our website at www.urlinsgroup.com and discover if there are any additional avenues for URL to assist with your success. Again, that website is www.urlinsgroup.com. Now, I'm extremely excited to be part of presenting this great program for everyone today. Single premium life has been growing in popularity the past few years. People, and more specifically baby boomers, are realizing that they have cash value in old whole life policies that they don't want to continue to pay into. They have money that is set aside and earmarked for the next generation, making little or no interest in savings or CDs, or have real concerns about their future with regards to long-term care. Today, we're going to discuss a product that will help your clients with these concerns. I'm proud to introduce Jay Spence. Jay is a senior internal wholesaler at National Western Life. He's here to introduce National Western single premium life products and discuss how they'll benefit your clients. Now, before I turn it over to Jay, I'd like to mention, should you have any questions during the broadcast, there is a question box on the right side of your screen. So please type your questions in there and we will answer them at the end of the program. So without further ado, I'm going to turn the program over to Jay.
Thank you, Jason. It's really great to be here. And I am very excited to be talking about National Western's #1 selling product, and it is called Lifetime Returns Select. It is a chestnut of the National Western family of products, and I am just thrilled to be able to partner here with Jason at URL to go over this product and show you the benefits and the niches for Lifetime Returns Select. So without further ado, what is this product? It is a flexible premium product that is an equity indexed based product. And one of the things that our clients really are looking for is a solution. They're looking for a solution to leave money to their beneficiaries, whether it be kids or grandkids. And they're also concerned about being able to access funds for emergencies, and also the likelihood that there may be some sort of a chronic care event at some point in their life. So with this product, we're going to address all of those particular concerns. You know, the old products from days ago, you look at this slide here and you see that old clunky cell phone on the left. Well, this is a new generation of life insurance products, a product that has what the consumers really want. That is benefits and liquidity. And we're able to do this in a quick fashion to get it done very quickly for the clients and get it issued so everybody can get paid and we can get the clients the products that they need. So Jason alluded earlier at the beginning to a few basically sources of where would money come from for this product. CDs, money market, mutual funds, investment funds not needed for daily living expenses. These would be the typical source of funds for this particular product. Jason also alluded to cash value rescue for a current life insurance policy. Policies that may be running out of steam. Your client may call you and say, gosh, I got this notice from the insurance company saying I need to dump more money into this old UL policy. Well, now you can do that you can rescue those policies by moving the cash value over to single premium. So very versatile. So what does this product have? Here's a little outline of what it offers. It's got a guaranteed death benefit. There's a 10% liquidity provision of a 10% penalty-free withdrawal after the first year. There's full return of premium. There's qualified care accelerated benefits as an option. It's simplified issue, and yes, agents love this. It's all done with an instant decision. You're going to know right then and there what the decision is. There's going to be no hoping, guessing, wishing. You're going to know right there. So just going to touch on some of the plan specifications briefly so you can see what this thing is, the mechanics. Again, guaranteed death benefit to age 121. There's a potential for some pretty good cash value growth through indexed interest credit options and or a fixed rate option. And there's a potential for a death benefit growth through those index credit options. And this is different from most other vehicles out there like whole life policies or even just regular fixed interest UL policies, because those policies typically don't have the ability to grow. And what I mean by that is the death benefit can't grow with cash value accumulation, and thereby the benefit to the kids or grandkids can't grow. And then the pool of money for long-term care can't grow. With our product, growth is key. Now, premium classes, we keep this pretty simple. It's non-tobacco, tobacco, it's male and female. We issue all the way down to ages of 45 and all the way up to ages as high as 85 years old. So we can get a nice range of clients into this product. We have to have enough single premium in order to issue a minimum face amount of $25,000. Now, the maximum face amounts are going to depend on the age of the client. And for those of you who are familiar with net amount at risk, this is a net amount at risk-based product, meaning that the insurance company will have a risk limit based on the age bands listed below here. So between 45 and 55, we can get an exposure as high as $700,000. 56 to 75 as high as $450,000. And then 76 through 85 up to $200,000. Now, let me be clear. That is the insurance limit. That's the max difference between the premium they give us and the death benefit we issue. So that's going to vary based on the client's gender and tobacco use. All right. So this is just a huge, huge concern. We know the likelihood of a long-term care event for most Americans is going to be imminent at some point. Usually it's said it's not a matter of if, it's a matter of when. Most Americans do not have, nor can they afford, traditional long-term care coverage. This is a great opportunity, again, to use a product where we can provide such benefits. And it can be done on a simplified issue chassis using a product that might originally have been geared toward leave-on or legacy benefits. We can also give living benefits to the actual insured. Ours works very simply. It's based off of the death benefit at the time of claim. Depending on the state, we can pay a lump sum of 24% up front. All states, we pay 2% monthly benefit. It will never exceed $10,000 a month, and we will always have a residual face amount of no less than $12,500. Now, that's for two reasons. Number one, we want to make sure there's a final expense policy in place. And number two, that keeps the IRS happy. We all know about the IRS, and we all know that they watch all these things. So we have to make sure, in order to keep those benefits tax-free, we play by the rules. So we cap our monthly amount no more than $10,000. So if you had $1 million death benefit, for example, 2% of that would be far more than $10,000 a month. So we cap it at $10,000 a month. That's within the IRS guideline. It's ADL driven. Most of you out there know what an activity of daily living is. We do the 2 of 6 ADL qualification here at National Western, or cognitive impairment. So as long as they cannot perform the 2 of 6 ADLs, or they are cognitively impaired, there's a 90-day elimination period, and we'll pay benefit on day 91. Home health care and facility care are included, and this is great. This is a great thing we do here. This is an indemnity benefit, not a reimbursement benefit. So we're going to pay the benefit to the policy owner, not to the facility. We don't need ongoing bills every month. I know that can be very cumbersome. It can be very tedious, especially if a family member is taking care of a client and there's a claim. They don't want to have to mess with that portion of the benefit. Okay. Liquidity. This is going to be really the main thing that you're going to be talking to your clients about with respect to their peace of mind and how they could access their funds if they really needed to get them back. And that's a built-in return of premium rider. It is on our single premium version of this product. It's automatically included. It's approved in all markets, and there's no waiting period. So this is going to be the peace of mind. Mrs. McGillicuddy, you would say, I've just laid out a really great alternative for your lazy money. That's that money in that checking account or that CD that's not doing much for you. You express concern about getting your money in a worst case scenario should you need it. Well, with National Western Life's product, Lifetime Return Select, you can get your money day one. There's a built-in return of premium. So we also have other ways to access funds, other liquidity provisions in the product. 10% penalty freeze. Many of you are familiar with annuity features where they have 10% beginning usually in the second year of the contract. That's the same here. The 10% starts in year 2, and it's 10% of the account value. Whatever's in the account value, they could take as a penalty-free withdrawal. They never have to pay it back, and will pro rata reduce the death benefit accordingly. So it's different from a loan in the respect that it does not have to be paid back. You're allowed one of these a year, and again, it's available after the first year of the policy. Interest options. All right, so I talked earlier, I alluded that this is a fixed indexed life insurance policy. So we've got basically 3 indexed options and a fixed option to choose from. We've got they're all S&P 500, by the way. We've got a monthly average, a monthly point-to-point. The most popular seems to be the annual point-to-point. That's got a cap. Currently, it's 10 on the annual point-to-point. And then, of course, we've got the good old-fashioned fixed interest rate. I usually advise my clients, my agents to tell their clients, rather, that this particular product really should be considered to be indexed if possible, because with the guarantees involved, the guaranteed death benefit, and the guaranteed return of premium, the indexing just makes sense. That potential makes sense. They have nothing to lose, only to gain. All right. Simplified underwriting. This is a big component to this product. Agents ask about, well, how do we get this thing, underwritten? I've got an 80-year-old client. Are they going to get through the process? Good luck. I've sold life insurance for years. I'm terrified to put them through underwriting. Goodness, what do we do here? Well, we've made this easy. We've made this simple. We've made this process where the agents don't dread it. They actually go, oh, man, this is a really easy way to get this done. So let me just highlight the perfect process. First thing you're going to want to do is once you complete the application, after you do a pre-screen, and I'm going to go over that in a little bit, you complete the application. Once that's done, you make a telephone call. Call usually lasts 15 to 20 minutes, and at the end of the call, they'll talk back to you, the agent, and they'll give you a decision right over the phone. You send in the paperwork with the check or the transfer if we're doing a 1035 from another life policy, and National Western will issue the policy, and you will be paid quickly. We pay daily commissions at National Western, so you can be paid very quickly. Turnaround on this product is once we get everything in, we can get them out 2 to 3 days, very quick. So point of sale underwriting. We have a phone interview process that the agent can call, you the agent can call Monday through Thursday, 9 a.m. to 10:30 p.m. Eastern Standard Time. Friday, it's even 9 to 6. Now, they don't do any weekend hours, but you can leave a message if the client doesn't have time to do the call or it's beyond the parameter. Let's say you've got a Saturday morning appointment. You can get everything done. You, the agent, can call, leave a message, and they can call your client, say, the next Monday, and they can get the interview done then. What are they going to be doing on that call? It's going to be a real-time MIB check. That stands for Medical Information Bureau, and they'll do a prescription drug check through a database. And basically what they're doing is they're just looking to corroborate what's on the application with what they would find in both the MIB and the script check, just making sure that everything is the way that it's presented to be. And again, it's instant decision at the time of the call. And we've got the number down below, but don't worry, we have documents on this. Jason will be able to get to you at the conclusion of this presentation. Okay. Here's I'm not going to go through all of these, of course, but here's a document that we have created that has the pre-screen questions, because one of the things that I get asked is, well, I don't want to waste my time, my client's time, and we don't want to waste National Western's time if I have a client that I think might be a good fit for this, but they can't medically qualify. So we've got a list of 12 pre-screen or knockout questions, if you will, that you should really go over with your client before you even go down the road of filling out the application. Go through these 12 questions, and I'm going to go, there's the rest of them here. I'm just kind of flipping through them. Go through these and make sure that the client can absolutely answer no to the 12 questions. Now, this is a black and white underwriting product. The client is either in or they're out. There's really no gray area. We don't do any full underwriting on this. It is a pass-fail, okay? So as long as they can get through the 12 questions with no's, and my other piece of personal advice is make sure you go over the prescriptions with your client. I've noticed that the few declines that we do get, and by the way, we've got about a 90% approval percentage on this product, which is very, very high. The 10% usually revolve around something with medication, or the client forgot to mention something that happened in their health history that we uncovered through the MIB. But medications are critical. Just make sure you review the medications with your client, what they're taking, and most importantly, why are they taking those medications? That'll help determine whether or not they're a great candidate for this product. Okay, so we went through some meat and potatoes of the product. I kind of went through the underwriting there with you. Let's talk a little bit about the legacy and protection. Your client usually wants to leave money to their kids or grandkids. Most people do. I mean, if they can, they've got some extra money, the lazy money that they're just not really needing. Essentially, they want to leave it on as efficiently as they can, meaning they want to eliminate taxes and they want to eliminate probate and they want to get that money to their kids or grandkids. This product can help with that. So I've put together this little presentation. I like presentations with sales ideas. So let's go back here. So we've got a $100,000 scenario on both of these pockets. Notice that we've got a CD on the left. We've got a National Western Life policy, lifetime return select policy on the right. So we've got 100,000 we're working with. On the left, we're just assuming a reasonable interest rate on that CD of 1.7%. On the right, we're just using a fixed rate, for example, of 3.55%, or it could be higher than that if the index and the indexes come back. After 10 years, the CD, we've got about 118,000, and over in the life policy, we've got about 122,000. The death benefit on the left, we're only guaranteed 100,000 because we don't know where we're going to be at any given time in that CD. The client could die the day after that they take out the CD, and there really isn't any interest, so they really die, and there's 100,000. Over on the right with the life policy, day one Now remember, we're assuming here a 55-year-old male non-tobacco. Day one, once this is issued, we've already got a death benefit of $207,000. Okay? So, where does that leave us with accelerated death benefits? Well, all we know is that we've got $100,000 guaranteed on the CD. But over on the right with the life policy, we've got a pool of money to take from of $207,409. Now, on the left, what do we know about CDs? The money is taxable. What do we know about life insurance proceeds? The money is not taxable if it's set up properly. We all know this. So I'm not the smartest guy in the world, but I can tell you that if I was going to pick between the two pockets, I would pick the right pocket. And I think you would too, and so would your clients. So tax-free, leveraged money is a way to really, really, really enhance a client's portfolio with respect to the lazy or leave-on money. All right. So this is one of my favorite concepts. It's called the split ticket concept. This is another sales idea. We've got option one and option two. So you've got a male 65-year-old non-smoker with $100,000 in savings. Wealth transfer is the objective. Option one. You're sitting at the kitchen table or they're in your office. You're sitting with them. You uncover the fact that they've got $100,000. Let's look at option one here. You could tell them, hey, Mrs. McGillicuddy, or Mr. McGillicuddy in this scenario, you're $100,000. What if I could show you a way that instantly, when you leave this office, we could turn that into $167,504. In other words, I can get you an instant 67% increase on your money. Would you want to talk about that? Well, no, they're going to say, of course. Okay. So with National Western's policy, we can based on your age, putting that $100,000 in, I can get you a guaranteed death benefit of $167,504. How does that sound? Wow, that's great. So instead of the $100,000, now probate and tax-free, you can leave them $67,504 more than that. And boy, I'll tell you, that's a pretty nice legacy to leave. Wouldn't you agree? Yeah, that sounds great. Hey, and I've got another idea. Have you ever thought about, you told me, though, you just want to leave them the $100,000. What if we have the insurance company help you pay for that $100,000? Well, what do you mean by that? Well, based on your age, we would need $59,700 of the $100,000. That will buy us a death benefit of $100,000, which is what you initially wanted to leave to your kids. Now we've freed up $40,300 that you didn't even really realize that you had. So you've accomplished your goal of $100,000 for the kids, tax-free. Now you've freed up $40,000 that you can take your wife on a cruise, you can remodel the kitchen, you can go to Vegas, you can buy a National Western Life annuity. There's lots of different things you can do now. I've just showed you a way to do what you wanted to do, and I've just freed up some money for you. Which one of these do you want to go with? So you've got an easy sales idea here. And let me tell you something, this sales idea works. It works well. Agents that I've presented it to have called me back, emailed me, or they've called me and said, Jay, it's the easiest thing in the world. I give them an option, and they usually, they almost always pick one or the other. Obviously, you'd like them to pick option one, wouldn't you? Because all the money's going to go into the single premium. But if they're kind of wishy-washy, maybe not, well, I don't know if I want to commit all of it, then you show them option two. And then you've just freed up some money for them. Okay. I'm not going to really get a whole lot into this, but this is an example of a 70-year-old female that has $50,000 in stock. There's a gain. There's capital gains here. Basically, the bottom line is we're trying to give money tax-free to the beneficiaries in this particular slide here by eliminating market risk and providing the tax-free benefits. So this is an example of what we could do in a certain circumstance using this 70-year-old female. So we've got a value of $67,000. It's placed into wealth transfer, and you can see how it would buy a $122,688 tax-free, probate-free benefit to the kids or grandkids. So there's lots of different scenarios we can show. This is just one that we put together, kind of showing a real life of a stock situation. Okay, I'm going to end with another product. These are a brother and sister product. This next product, and I'm going to highlight it briefly, everything's pretty much the same with respect to indexing, underwriting. It does not have a return of premium or chronic benefits, but this is a wealth transfer product for the qualified money. The guy or gal that has the IRA money that they don't need, maybe they're at a point where they're taking RMDs, they just want to leave that IRA to the kids or grandkids. Well, how about let's liquidate while they're alive, and we can have a tax-free death benefit to the kids. And this product is called Lifetime Return Solutions. So basically, it's pretty straightforward. You've got an annuity or an IRA. You bring it over to National Western Life as a transfer into a behind-the-scenes internal single premium immediate life annuity. And internally, automatically, National Western Life will fund the policy over a 5 or 10-year period into the policy. You would receive a 1099. The client would for those payments. They would have to pay the taxes on those from money from another source, because we do currently use all the premium from the SPIA to fund the policy. Now, what's the point of this? The point is to liquidate and spread out the tax liability over a 5 or 10-year period. That's the point of the product. Most clients are not going to be wanting to liquidate their entire IRA in one year, because what will happen? They're going to get a massive 1099 from the IRS, aren't they? And they're not going to want to do that. So liquidating gradually over a 5 or 10-year period is the point of this product. And again, it's the same underwriting as I mentioned before. So this is another solution to leaving money to kids or grandkids using the qualified dollars that they may have that they don't need. So let me just end up here. National Western is an AM Best A-rated carrier. We're A with Standard & Poor's. We have a high alert score, one of the highest in the industry. That's what banks and financial institutions use to rate us. That means that we've got money to pay our bills and we run efficiently. Our risk-based capital ratio is 582. For those of you who understand and know what that means, we are highly capitalized, conservative company. We've got money in the bank to pay all of our claims and then some. So there it is, S&P there. And that's, I wanted to end with thanking Jason at URL for having me on the call. I wanted to thank everybody for their attendance. And if you have any questions, Jason will be glad to answer them. You can also get a hold of me, National Western, if you have direct questions. But we really appreciate you, and thanks for your kind attention. Jason, I don't know if you had any questions that came through the system, but I'll be glad to stay and answer any questions as they come in.
Yeah, you looks like you did a fantastic job of explaining everything, because I do not have any questions. So kudos to you. I thought that was a great informative presentation. I specifically like the scenario with the $100,000, the two option technique. So that was it's always good to give your clients options, let them choose. That way they feel like they're in power, in making choices. So that's great. So yeah, I just want to thank everyone for joining the presentation today. Want to echo what Jay said. Please feel free to give us a call at URL, for any single premium life or annuity needs. If it's just brochures or illustrations or, just answers to your questions. I want to give out our toll-free number. It's 1-800-926-8875. That's 1-800-926-8875. My name again is Jason Collins. I'm at extension 156. You can also ask for Joe Corio. He's at extension 111, or Maria Adams at extension 102. So thanks, everybody, and have a wonderful day.